Right. The other interesting topic that we're going to talk about today is cryptocurrency. Now, the kind of downfall we saw on Friday, and post that Bitcoin saw a gain of around 5% plus, Ethereum up almost 11% and 4% away from pre-liquidation levels as well, and that's seen on October 10th. Even in terms of the overall addition in terms of where the market cap is concerned, it's added around $550 billion since the Friday bottom as well. The understanding here is as to, if somebody has gone ahead and invested in crypto, what he or she should do. And to exactly ask Karthik, to exactly ask this, we're joined by Karthik Jhaveri, who's the Director of Investments at Tanzan Capital, joining us now. Karthik, hi. Thank you so much for taking out the time and speaking with us. My first question is to you is as to this kind of volatility we're used to, when it comes to cryptocurrency. But in the recent events, any particular trigger as to why that's happened?
So the triggers are different, but the reaction is always the same. So the thing is, what happens with cryptos, I mean, when you sort of compare them with the stock market, a 20% movement on the cryptocurrency is very easy on a digital asset. Let's call it digital asset to simplify things. It's very simple, very normal, very ordinary. So a little bit of negative news or a little bit of sentiment which might affect the dollar adversely automatically sends shock waves. I mean, it's a ripple effect. It sends all those waves. Now, on top of that, what a lot of people do is they don't actually have the money. So what they've done is they've got $100 and then they take positions worth $200 and $300. It's called leverage positions, right? So then when you're already borrowing some amount of money and your base currency looks a little bit weak because of some geopolitical reason or because of an announcement that comes from a politician, what happens is the reaction is severe. And because the reaction that being severe, the losses can also be humongous, phenomenal, because in one day, if a commodity or if a stock or if a digital asset like crypto, if this goes down by about 15-20%, a lot of people are going to stand to pretty much wipe off their whole year's profit or maybe more. So that's the problem. That's the volatility factor. And this time it was leverage plus the statement that came in that China is going to be levied on 100% tariffs. And I mean, obviously, dollar gets a little bit, under duress, under a little bit of stress, and as a result of which, immediately the cryptos will also sort of react to it. So I think, we'll always know the reason later on, but this is typically what happens. Anyway, whoever is doing this thing should be very, very aware of the fact that a 20-30% move at any point of time is, quite expected. Also, remember one thing, it's run up quite a bit, right? It had a fabulous run, and after a run, a 20-30% correction, I think should have been expected anytime.
So then, Karthik, would you see the recent kind of bounce back as an initiation of a bull cycle, or this is still a speculative move that we can anticipate right now?
So the thing is, this is my personal belief that it's always been very speculative, because this is an asset which is not really backed by anything right now. Most of the governments don't recognize it. In India, we don't have so many options to even, execute these trades in a legal and, in a very financially accepted manner, so to say. But if you just look at purely from the chart point of view, and which is what you can only do here, then this kind of a reset is always some sort of a base setup for the next move. And till the time dollar remains under stress and till the time we have US economy under such huge amounts of debt, I would think that, cryptos and at the same time commodity and precious metals would always keep doing a little bit better, because there is so much of uncertainty and these things thrive on uncertainty.
Karthik, what about the kind of participation that India has in crypto? It's still muted, right, as compared to where the global participation stands. What are your thoughts on that?
So, like I said, there have always been talks of some app or the other, then it gets shut down, things get, and it's always very dangerous. But there is a beautiful way. I mean, if you really wanted to participate into these digital assets, then a beautiful way is ETFs, which are registered on the American stock exchanges. Today, it is quite easy for us as an Indian citizen to open an account, which is a US dollar-based account, and by which we can buy stocks that are listed in NYSE, NASDAQ, S&P, etc. And along with that, you get thousands of ETFs also that are listed. And out of those thousands of ETFs, you have at least a good, 40, 50 at last count, maybe 80 ETFs, which are dedicated only to crypto. Some of them are leveraged, some are not leveraged. There's a whole variety of that. There's a lot of choice available. It's a perfectly legitimate route of doing it. So if you want to do it, I mean, but then what happens is that there is a thrill of, owning a few units of that digital asset through your app, but then the app's legality itself is questionable. So rather you open an account which is all approved and through the bank channel transfer the money, money gets transferred in the American account. It's all just the way we do trading in Indian stocks. You can do the same thing in American stocks, just that you'll have to do that in the Indian, during the night time of India, because that's the time the markets are open there. So that's the only little challenge. But you can even put market orders and you can put, time-based orders, etc. So it's not so difficult.
Right, Karthik, I'm glad you mentioned about ETFs. Just want to get a sense as to how much of these rallies generally are kind of affected by the ETF flows, and how much of it is just retail speculation or retail trading is, what I would like to call it as.
See, I don't have numbers on the US market. If they were Indian numbers, I would still have a little bit better, tab on them. But my understanding from the people I speak to is that there is massive retail participation. So I would even hazard a guess of about 60-70% is retail participation. So there are very popular ETF platform providers like the iShares, the Vanguards, the Pincos. So they do this kind of ETFs. I mean, Fidelity also does it. There's a whole lot of them. So like I said, I mean, all the big names that you can think of have already established themselves in the mutual fund space, in the ETF space, and they've also launched a whole variety of funds for being able to facilitate investments in digital assets. So you can do it across the board for a lot of that. But I would think largely that is retail participation, unless there are institutions who take asset calls, but they don't do that. Mostly it's for retail people and people like us from around the world who want to maybe participate into that digital, but don't have an identified or a regulated app or a regulated sort of a software platform through which we can place our execution trades. So then in the meanwhile, these ETFs become a great option.
Karthik, with regards to where the tax is concerned, how is digital assets taxed in India? Give the viewers that perspective. And do you think this is one of the reasons as to why people in India are not very enthused about going ahead and investing in crypto? Could be one of the reasons?
Not exactly, because see, cryptos are also taxed at 30% plus the surcharge and the surcharge depending on the slab of income that you fall in. So the tax is 30%. It's the highest level of tax, right? Highest rate of marginal tax. But then, if that were true, people would not even dabble in futures and options in the Indian stock market. The futures and options in India also are taxed as business from the income from other sources. It is classified as a business income and you are taxed at the maximum rate. There is no discount or there is no rebate available there. So we have so many people participating that these days in most of the broker portals, you have that message that SEBI has been displaying, that 9 out of 10 people don't make money in futures. But despite that, there is enough participation, right?
Yeah.
So I don't think that tax is a deterrent. The tax is not the deterrent. A bigger deterrent is which app or which platform do I use by which I can make a legitimate trade, it's recognized properly, and it does not get me into trouble. And also there's a massive fear of whichever app you use getting hacked and suddenly you invest money and your money disappears. I mean, you don't mind the 20-30% fall, but what if somebody just stole the bitcoins or whichever other crypto coins you had in your digital wallet? If those go away, then that is a bigger risk. So I think that apprehension is very loud. It's very big, and I think that's probably one of the primal factors why people don't do it, why so many people don't do it, right? Tax, I don't think is an issue.
And because, you mentioned about how, a lot of these apps or platforms that offer crypto trading or investing in crypto have kind of shut down.
Yes.
What is the kind of regulatory measures, in your opinion, that government could take to curb this kind of shutting down of apps? Because at the end of the day, it is the Aam Aadmi that is getting affected and losing their money, hard-earned money.
So see, firstly, what happens is because this is now recognized as an asset, we will hope that at some point of time the asset also brings regulation. See, firstly, we have to just step back and understand digital currency or digital assets were not even part of the Income Tax Act. So there was no mechanism of even doing anything on charging. I'm talking a few years ago. Then slowly this came in. Now there will be regulation to come and say that, okay, if you really want to do this, then these are the mechanisms and these are the regulatory do's and don'ts. And therefore, companies can then invest and set up a platform to do this thing. And these will be mostly broking companies like, the leading banks that we have, the leading brokerage houses. The way they offer you today the options of, trading in equity, in derivatives, in currency, in commodities, in the same fashion. It's not a big deal for them to also include crypto. But when the regulator brings out a lot more, do's and don'ts in this whole space, that time we will see brokers and banks who are in this business giving us this opportunity to even invest in these things. Also, there needs to be settlement things. There are lots of issues there, and which is why, and it's not urgent. It's not a necessary thing. So therefore, it's not got the attention due.
Karthik, one last piece of advice that you would want to give retail investors out there who go ahead and take the risk of investing in crypto.
Don't do it. I mean, don't do it with only a very, very minuscule amount of your money. I mean, if you had to compare cryptos, then I would say versus cryptos, maybe consider doing futures and options against that. The risk level is the same, but at least it is legitimate. The money is there in front of you, and you might be able to take better calls. And information is so much more better available to you at your fingertips if you are, doing speculative activities within India. So that's the thing. And if you must do it, and if you are interested, then I think go the ETF route. It's a much more sound, safe, and effective route.
Okay, so don't do ETF is the takeaway. Don't do crypto is the takeaway from that conversation. If you want to do it, choose the ETF route just for the thrill is what Karthik is indicating. Karthik, thank you so much for giving us those invites, and I think this is a much needed conversation for investors to be aware of. Thank you so much for giving us all those insights and of course taking out the time. All right, viewers, with that, we're completely out of time on this edition of Your Money Matters, but do stay tuned. More news and updates on the other side.